sponsor 揾你出嚟。係咪開始啊？而家開始咗啦。Okay, thank you for coming for today's event. Today's event is a 2022 GRESB Regional Insights event in Hong Kong, and we have 50 people in person, and we have more than 100 people online. Yeah, and today we will have first opening speech by Cary Chan, and then Quinnie from GRESB will talk about some insights and updates from GRESB, and later on Grace Kwok from AEC Group will talk about the navigating to net zero, and we have followed with a panel discussions for almost 1 hour. We have 5 very world-class speakers, panelists to join, and then after that we will have introductions of the sustainable food sponsor, and then we will follow by networking drinks for those who cannot join in person at this moment, but feel free to come after 5 o'clock. Okay, to have a drinks together. Okay, and the first thing I would like to thank you, GRESB, to give us opportunities, and also thanks AEC Group, 配完環保 to co-host this event, and we have the venue sponsor from Henderson Land, and also we have a group of supporting organization, AEC Capital, CRECCHKI, HKGFA, and also HKGBC, and also we have the sustainable food sponsor, Clean. Okay, and may I first invite Cary Chan, the executive directors of HKGBC, and also chairman of Asia World Green Building Council Asia Network. Okay, may I invite, welcome Cary Chan.
Good evening. No. Good afternoon. Good afternoon, everyone. And I'm very deeply honored to be invited to give an opening to the GRESB Regional Insight 2022. I started involving on environmental reporting while I was in Inspired Properties back in the late 90s. And I was also approached by the GRESB in the early 2000s on ESG reporting and benchmarking. At that time, my impression on environmental reporting and benchmarking was not that good. Well, I was thinking that it cannot help much, as we are just reporting on what we have done. So therefore, but a few years later, I realized that those are extremely powerful instruments in driving the industry forward. When I have to demonstrate to the society year on year on how we are progressing and scratching our heads to do whatever we can to maintain our leadership position. These are one of the key driving forces that have been pushing the industry forward in the past 15, 20 years. Now with the investors' concern on ESG and emerging appetite on green financing growing in the past decade, credible benchmarking and rating tools like what GRESB is providing are of paramount importance to the industry. I'm happy to see that GRESB has been growing from strength to strength since I first met them some 20 years ago. They're definitely the leader in the industry now in providing business intelligence, engagement tools, and regulatory reporting solutions for investors, asset managers, and the wider industry. I particularly like the mission statement, which reads, to provide financial markets with actionable insight ESG data and benchmarking, the word actionable is very, very important and is what is needed by the industry, but often forgotten. So on that note, I will end here and look forward to the sharing of insight by Quinnie and other speakers. Thank you.
Okay, thank you, Cary. And the next session will be online, actually. Quinnie will share some insights from GRESB for this year's result and also some updates for coming years, okay? Quinnie, please.
Thank you, Dennis, and thank you, Cary and Hong Kong GBC for your support and good words that was said. Good afternoon, everyone. First of all, on behalf of GRESB, I'd like to thank AEC for hosting this regional insight event in Hong Kong. And thank you, our industry partners, consulting partners, participants, and investor members in the region for supporting and joining this event. My name is Quinnie Li. I'm the GRESB representative in Asia. I apologize that I cannot physically be with you today, but I will be presenting to you through video live on this year's GRESB result focused on Asia, further tuning in on Hong Kong and mainland China against the backdrop of the global results, all of which are based on the 2022 GRESB participant data to provide hopefully some useful insights on the regional industry trends. As many of you are very, very familiar with GRESB, it is an investor-driven global ESG benchmark and reporting framework for listed property companies, private funds, developers, investors, extended also in 2016 to infrastructure assets and funds. The assessments shaped by what investors and industry consider to be material issues in the sustainability performance of real estate and infrastructure investment. The methodology is consistent across region, investment vehicles, and property types, and also aligns with international reporting frameworks. GRESB has a multi-layer validation process, which the data is scored and benchmarked. The result is high quality, validated data that investors and participants would trust and can use in their investment engagement and decision-making processes. Participants or asset management companies will use the tool to identify risk, opportunity, and impact, attract new investors, improve investor engagement, compare against peers on ESG performance, report validated ESG information into market. Next, please. Meanwhile, our currently 170 institutional and financial investor members with now more than $51 trillion in asset under management, they will use GRESB's comprehensive framework that's tailored to real assets across different asset classes to compare like companies against their peer group and make investment decisions. The tool also provides these investors with actionable insights and data collection shortcuts to help them with tracking ESG performance as well as investor reportings. Next, please. Now, let's look at how the GRESB universe of participants did in 2022. Next, please. First, we look at the real estate trends. Since the inception in 2009, the 2022 real estate benchmark for real estate saw the largest ever growth in total numbers, with now 1,820 entities participating worldwide, with a 20% increase from last year, covering $7 trillion of gross asset value across 74 countries. Next, please. Significant growth was focused in the Americas, about 30% growth, Asia, 21%, and Europe, about 16%. In terms of total number of participants, Europe is still #1 by far, but places such as Asia and Americas are slowly starting to catch up. Next, please. let's look at the like-for-like changes that we've noticed this year. For energy consumed, there was an increase of 0.83%. So there were also much smaller reductions in greenhouse gas emissions and water consumed compared to the past 2 years. Of course, when the world hit the pause button, we would definitely see big reductions in environmental footprint as a result. However, now we're seeing these numbers on average rise again as most countries are coming out of COVID. Next, please. In terms of data coverage, we can see that companies are doing a much better job year on year for energy, greenhouse gas, and water data coverage. On the other hand, waste sees a decline still year on year. Let's look at infrastructure very quickly. So overall, taking into consideration both assets and funds, the infrastructure benchmark increased by 16%, from 707 in 21 to 818 in 2022. For assets, it increased from 558 to 650 in 2022 as well, a 17% increase. So for funds, it rose about 11%, growing from 149 to 166 in 2022. Next, please. Lastly, again, let's analyze data coverage for infrastructures. We can see that, unlike real estate, reporting improved in every single metric under the infrastructure assessment. Next, please. Now let's zoom in even more into our continent, starting with real estate. Next, please. So participation in Asia has grown by 21%, as said earlier, from 238 to 288 to include 50 new participant entities. Participation in India, as you can see from this chart in particular, has almost doubled, ranking #1 in Asia in terms of new participant growth. This is perhaps the thing related to India's president's more aggressive environmental action plan, as well as the 2070 net zero announcement at COP26 last year, nudging local companies to do a bit more in ESG. Perhaps a good example for how government policies and targets could move the dials quite quickly for private sectors. In the second place comes mainland China, which despite a slowdown in real estate sector and right now still continued COVID-19 related lockdowns, has expanded its participant base by 30%. Hong Kong in particular rose 36% from 11 to 15 participants. Japan, one of our largest participant bases in the region, increased by 12% from 109 to 122 participants, making it still the leader by far in terms of volume. Next is China with 48 mainland, and then India and Singapore coming in third and fourth places. Next, please. So in terms of scores, global average GRESB score increased by 1 point to 74 for the standing investment benchmark. Asia participants did 4 points above the global average. This is also a very significant improvement when compared to last year's score of 75. Asia has a better score than actually every other region, except Oceania, which has been the leader for many years now. Next, please. Let's look at the GRESB score for development. So it also had a 2-point increase from 79 to 81 globally. Also, Asia did continue to do better, slightly than average global score. Next, please. The increase in Asia is driven by significant improvements across the performance components, predominantly in the aspects of targets, tenant and community, data monitoring and review, as well as building certifications. So if you compare Asia on the world stage, it is making good year-on-year progress on target setting and building certification. But they're still lagging behind the global average. So maybe perhaps these two areas are good places for the Asia participants to start looking into while building on the existing momentum to grow. We can also see the same trends we observe globally for year-on-year reductions in source of energy, greenhouse gas, water, signaling the lagging impact of COVID on building performance. However, you will see that the Asian reduction in the scores for these aspects is milder than what we observe in the rest of the world, as the region has still not fully exited the pandemic, especially in places like mainland China, Japan, or even Korea. Next, please. Now, this graph shows the score breakdown in Asia, but what we can also analyze from this graph is we can see from here that usually participants improve their score as they continue to report. This is especially great also for the investors because they really value the improvements. And if the participant has some sort of sustainability-linked loans, it also helps to further reduce interest rate. And the saving hopefully will in turn be invested back into the overall ESG performance. Next, please. Despite the registered slight increase in year-over-year building energy consumption, the actual energy intensity of the buildings in Asia is on par with last year's. This shows while some participants in the region have already experienced a return to pre-COVID state of operations, we can expect that more entities will continue to see the impact of the pandemic into next year's like-for-like performance metrics. Next, please. So to wrap things up for Asia, I think we can use the APAC real estate benchmark to analyze through the lens of TCFD recommendations, since the framework matters so much now to future-proof a lot of the companies because of the growing pressure on companies from not only governments, but also consumers and investors to respond to climate change. So by analyzing GRESB participants' TCFD alignment reports, which is relatively a newer GRESB tool, we can see that APAC region is gearing up its readiness to report to TCFD recommendations. The level of TCFD alignment has gone up across the board for all 4 TCFD core elements from 21 to 22, meaning the participants are really improving using the GRESB benchmark and getting them ready for global alignment. So as a side-by-side comparison to see where Asia stands, you'll see that Oceania on the right, leading TCFD alignment across all 4 pillars, while Asia keeps a very small lead on global average for governance and metrics and targets. So furthermore, while Asia had lacked significantly in 21 on strategy and risk management, large gains have been really made to bring these almost to the global average in 22. So the main driver of this increase are really the core elements of strategy and risk management, suggesting that many managers have started implementing climate-related strategies and as well as risk management processes after they've already set up the necessary governance structures. Next, please. Now let's quickly again look at infrastructure. For Asian assets, the benchmark rose 31 from 31 in 21 to 51 in 2022. And that's a nearly 70% increase, given that the infrastructure assessment was published in 2016, a relatively newer assessment standard. So it's making a lot of progress in Asia. With that, Korea and India contributed to these growing numbers the most. For funds, there was a 20% increase. Next, please. Also from 10 in 21 to 12 in 2022. Next, please. So when we look at the GRESB model for infrastructure assets, the Asia region sits still at the smallest performer in 2022. India and Korea, of course, accounting for about 34 of 51 assets present in Asia, have an average GRESB score that is 9 percentage points lower than the highest performer. So this is mainly because there's a huge increase percentage of participant numbers for Asia. So there will be a lot of first-time participants, which eventually will reduce the overall growth in scores. Next, please. For funds in Asia, similar to infrastructure asset, the fund portfolio coverage is one of the lowest, with a value of 54% in terms of equity weight, and with the benchmark average being 62%. Next, please. So in terms of the indicator scores, you can see that Asia increased in just about every metric, including leadership, policies, reporting, risk management, etc. And only stakeholder engagement, energy, health, safety, and certification awards dropped, while the consumers aspect remained steady. Next, please. Now let's tune in even more on Greater China. Next, please. Before I do that, I'd like to first look at the regional sector leaders this year in Asia. As you can see earlier, the scores in Asia were quite good compared globally, and it also did better than last year. So we have this year several regional and global sector leaders in Asia this year and from Asia. So up front are the standing investments and core developments participated from this region. Huge congratulations from all of us at GRESB to all of these participants who made it to this year's sector leader list. Some of them actually stayed on this list for a few years now, and we hope that we will see more leaders from this region next year and many years to come. Next, please. So in terms of Greater China scores, including mainland and Hong Kong, for standing investments, we can see that average score increased 4 points to 76 from last year's 72, lagging slightly behind a Asia average of 78. Next, please. For Greater China, next, please. So for Greater China development scores, average score also rose by 2 points, lagging only 1 point behind the Asia average. Next, please. Zooming in even more into Hong Kong, so for standing investments, it's increased by 3 points, surpassing Asia's average by 1 point. Very well done. Next, please. But more impressively, for the development score, so Hong Kong average score had increased by 5 points, surpassing Asia average by 2 points. Next, please. These Hong Kong participants mostly come from retail and mixed-use sectors. Next, please. So in terms of data coverage for China, mainland, and Hong Kong, we can see that Hong Kong does particularly well in waste, but lagging in energy, greenhouse gas, and water compared to Asia and mainland China. Next, please. Last year's benchmark, if you remember, showed unprecedented reduction in utility usage, with like-for-like reductions in energy consumption, greenhouse gas, and water usage nearly threefold from previous years. So these reductions were most pronounced in Asia due to COVID measures, as well as improvements made in engaging tenants and implementing efficiency measures in the region. Of course, in 2022, we experienced different contributions of COVID-19 impact due to different COVID policies in each sub-areas of Asia region. As you can see from this, like-for-like performance chart. So Hong Kong performance on greenhouse gas is further reduced than last year, while water and energy had a small bounce back. As mentioned earlier, I think there's going to be a lagged impact of COVID and also very different magnitude in different regions within Asia. Next, please. This graph shows the results from comparing Asia, mainland China, Hong Kong management aspect scores between 21 and 22. So with the blue line indicating Hong Kong score and orange indicating mainland against China, Asia as a whole in the background. So we can see that the strongest improvement in Hong Kong is on reporting, while falling short on leadership scores and remains somewhat steady for the rest. Next, please. So for performance aspect scores, Hong Kong assets improved significantly on targets, on data monitoring, on building certification, and improved slightly on tenants and community, while we see a decline on energy, greenhouse gas, and water as pre-COVID impacted numbers. Next, please. So for development scores, Hong Kong improved all across the board and improved more significantly than others on a few aspects, such as material, energy, water, certification, and stakeholder engagement. Next, please. So as requested, I'd like to use the last bit of time to really briefly talk through the changes and updates and new tools offered by GRESB this year. So as you can see here, we have a TCFD alignment report tool. So TCFD provides investors with more relevant, clear, consistent information regarding the financial risk and opportunities that companies now face in light of climate change. The 11 recommendations from TCFD that were introduced in 2017 as voluntary measures now are quickly becoming integrated into regulatory frameworks across the globe, with many jurisdictions making TCFD-related disclosure mandatory in the near future. So Hong Kong Stock Exchange announced plans for mandatory TCFD-aligned climate-related disclosure by 2025, which means more organizations now in the region are at risk for not being able to translate their strategy into relevant risk management processes. So today, actually, less than 20% of GRESB participants have the necessary processes, strategies, tools, or data collection system in place to satisfy TCFD. However, just by participating in GRESB assessments, so our members have already taken the first step towards TCFD disclosures and can generate the report, alignment report, without additional reporting efforts in order to find gaps, to compare with peers, and to engage with investors. So we do encourage our Asia participants to start looking into this tool already available, as well as others. On our website, you can find transitional risk report and climate risk platform, etc. Next, please. Now a bit more on overview of the 2023 changes for our standards. A lot of you would be quite interested in this bit. So as a result of our, we have a prioritization exercise every year. So the decision for the GRESB Foundation this year was to focus the strategy changes for 23 standards on a few aspects listed on this page, including net zero, diversity, equity and inclusion, physical climate risk and transition risk, as well as, of course, to explore the opportunity to start addressing the embedded carbon. Next, please. So a lot more details on this. So briefly, you can find from this table, summarizing the strategic topics to be addressed and scored, mentioned earlier, as part of the changes agreed for the 23 standards. So if you see addressed, that means simply it's included in the standard already. If you see addressed and scored, that means it's included and used in a way in the scoring of relevant indicators, which means the overall score at the end. So one noticeable area of debate at the moment within the real estate standard especially was around immediate need for GRESB to agree and to promote a single definition of net zero, to assess net zero efforts and then performance in the GRESB standards. So in absence of a clear consensus this year, and also we have disparity of views across different regions, it was then decided that net zero would be addressed in the 23 standards without a prescriptive definition. So however, it was agreed that this is a very important discussion point and should be revisited next year as a priority during our 23 committee work sessions. Next, please. Lastly, I think there, if you know GRESB very well, you know that GRESB has the most comprehensive website. So we keep ourselves very transparent and hopefully very supportive of our community by posting updates, and you can download a lot of the key resources online. So with all that I've mentioned earlier, including all the data, you can actually find documents and data points and information online. So this page has listed all the documents available now to basically give you a lot more details and information on the changes for 2023 standards. So now this concludes my sharing on the 2022 GRESB results and insights. So I know there are a lot to take in. Most of these data, once again, can be found on our website. And of course, our Asia team will be very happy and will be around to support and to answer any of your questions in the future. And thank you, and we look forward to see you as a participant in 2023. Now back to you, Dennis.
Okay, thank you, Quinnie, and we got a very detailed insight, and we have a lot of changes and updates in 2023, and yeah, thanks for the sharings. And next, we would like to welcome our host, AEC Group, GRESB training partners. I invite Grace, chairman of AEC Group, to give us some more insight.
Yeah, thank you, Dennis, and thank you, Quinnie, for the sharing. Sorry, I need to hold my laptop because the number on the screen is a bit too small for me. So yeah, since Quinnie has mentioned that net zero is a topic that is quite heavily debated in the GRESB World State Standard. In fact, I'm also one of the committee member, so I understand we always have quite a long discussion, and it can't, reach an agreement. So this is like a compromise, for the 2023 that we're going to address it, but we're not going to score it until we come up with more specific criteria, and also the standard as well as its application for different type of assets. It's also an area that really need more research into. So in my part of sharing, I'm trying to address, the elephant in the room. So I'm going to talk about net zero transition for the real estate sector. So navigating net zero transition is even more complicated. So firstly, let's have a look into our global progress towards the decarbonization target for building sectors. So this is a report just published in October this year. The report is called State of Climate Action. And in fact, in the report, we find out that the transition towards highly efficient and electrified buildings is only advancing very slowly. In fact, we are off track. So if you can look at the graph on the left, it shows that we need, sorry. Okay, thank you. Thank you very much. Maybe I just hold it. Okay. Thank you. Thank you very much. So you'll find that, in fact, some of the decarbonization efforts in 2015 and 2019 is outpaced by the increase in building stock and also by the hotter summer, which increased our cooling demand, and also by the not enough, deep energy retrofit we are seeing in the existing building stocks. So we need 5 times of the effort for the commercial. Can you see it on the upper part of the chart? Okay. I really need to look into the numbers. Sorry about that. I didn't realize. Okay. So on the pie chart in the right-hand side, you could see buildings still represent more than 6% of the global greenhouse gas emission. I think our online participant probably could see those figures more clearly. So we need a factor of 5 acceleration rate for commercial buildings and 7 times faster decarbonization rate for residential buildings in order to meet the 2030 targets. So next slide, please. So if we want to deliver net zero, we need to first define net zero, right? So when we talk about net zero emissions, we're talking about, the whole of greenhouse gas emission. We try to reduce it as much as possible and then remove the rest from the atmosphere. But we also have net zero carbon. And in this scope, you're talking about building level, we have the operational carbon and the embodied carbon. But then make it more complicated. There's other different definition like net zero carbon efficient. When we make the building more energy efficient, then we could call it net zero carbon efficient. And further, if you look at the chart on the right hand side, if you further eliminate fossil fuel from your building level, building sites, then you can become net zero carbon ready. And if at your location the electricity grid is decarbonized, then your building will be able to reach net zero carbon. But if you take a further step to address embodied carbon, then you would reach absolute zero under the definition of net zero. So when we're talking about net zero, in fact, there's so much differentiation and different definition. And also, we have different net zero initiative, framework, commitment, and target. Today, I just have a discussion with a developer in Hong Kong, and then he explained to me why they don't set a net zero target for the company, but instead, they set a net zero vision for the corporate level, but then they set out net zero carbon target for the building level as part of the strategy. And the reason is something I didn't think of. It's because the management, that maybe they would work there like for 5 years, 10 years, for the board level, maybe 6 years. So they were more comfortable to set a short-term target. And if it's a net zero target for the whole corporate as a long-term target, they would consider a vision is more desirable. So that is also some interesting corporate consideration in this aspect. And also we have net zero standard, the UK Green Building Council, they're trying to develop one for the building level. And of course, we want to certify net zero, both on building and portfolio level. Next slide, please. So there are many net zero schemes, and most of them launched in the last 5 years. So because the industry know that it's imperative for them to achieve net zero carbon, and also there's a shift in the industry demand and sentiment after COVID to accelerate this. But another reason we have so many different initiative, framework, and target is also because we have different stakeholders in place, right? The asset owners, they may be looking at certification that would help with the valuation of the asset. And also we have the investor, and also we have the occupier. They may be looking for different type of net zero scheme that suit their use. So, and another thing make it more complicated is because some of this, we call it market-driven net zero scheme, may not necessarily align with some of the government pledge, like the carbon neutrality pledge may not be fully aligned with some of this market-driven net zero scheme. So this may also, this kind of misalignment may also complicate the effort. So some of the scheme, they may have targets, and some of them may not. And another features of this net zero scheme landscape, you can see on this chart, is the interconnection of some of the schemes. So for instance, like CRAM 2, in fact, they're being used together with some other initiative. So this, next slide, please. This is some of the key differences of this scheme, such as emission scope. You could see though most of the scheme cover landlord operational energy, some of them didn't cover tenant operational energy. So scope 3 may only be covered partially. And also embodied carbon is only covered by a few of those schemes. And of course, the use of offset is also another big difference. Some of the scheme with set of threshold and also requirement for the use of offset, like a limit of 10% of offset for the science-based target scheme. And also, some of this scheme is for different type of asset, such as office, retail, industrial, residential, or other. So some recent development, next slide, please. One of the recent development is the alignment. Next slide, please. It's the alignment of Science-Based Target Initiative and CRAM, the decarbonization pathway. And what they're trying to do is to have a top-down downscaling. So they use the global carbon budget and then downscaled it to determine an asset level decarbonization pathway. And CRAM is also used by GRESB, and they use greenhouse gas emission divided by floor area coverage to determine an individual access intensity-based transition pathway. So this is now under public consultation, and I think today is last day for the public consultation of this alignment. So if you're interested, please take a look. The chart on the left-hand side, the bottom, is in fact the decarbonization pathway for an office in Hong Kong. So the red line is previous version. So the latest version is the green line. So in fact, the decarbonization pathway has become a bit more stringent with lower baseline. Next slide, please. Another key issues in net zero, navigating net zero, of course, is embodied carbon. we have upfront carbon during construction, and then in use stage embodied carbon, and also end of life embodied carbon. In fact, a few organizations, they have set out embodied carbon reduction target, like the RIBA. They set out embodied carbon reduction target for office, schools, and residentials. The range is around 30% reduction for 2025, and then 50% reduction for 2030. And World Green Building Council, they have also set out embodied carbon reduction target of at least 40% by 2030, and then net zero embodied carbon by 2050. So this is my last slide. So when we're navigating, sorry for the small word, I'm going to send back the PowerPoint to you after the event. So when we are navigating net zero transition for World's Day, we need to adhere to some of the core principles, though there are so many different net zero schemes that you could choose. I think we are going to have more in the next few years. So some of the core principles, like energy efficiency first, use the whole building scope, including landlord and tenant energy usage, and landlord and occupier collaboration, whole life carbon accounting, and also differentiate property and corporate level net zero claims. And most importantly, minimal use of offsets. So that's the end of my presentation. Thank you very much.
Okay, thank you, Grace, navigating us through the net zero transition journey. Okay, our next session will be a panel discussion, and I will be the moderator for this session. And I'm Dennis, and I'm the CEO of AEC Capital Group, and also founding president of GBA Carbon Neutrality Association. So we have 5 panelists today. May I invite our first panelist to the stage? Ladies first. Okay, may I invite Ellie Tang, Director, Sustainable Investment, Fidelity International. Ellie, please. And also the second one, Entela Benz, CEO of Intensel. Yeah, alternative. Yeah. And also Tracy Wong Harris, Head of Sustainability Finance Asia, Standard Chartered, and Vice President and Deputy Secretary General of HKGFA. Tracy, please. Now, may I invite Cary Chan, Chairman of World Green Building Council Asia Pacific Network, also Executive Directors of Hong Kong Green Building Council, HKGBC. Okay. And also, may I invite Johnny Yu, Advisor to Chairman, Henderson Land Development Company Limited. Yeah, welcome all. So, today's panels, we will talk about, the topic will be insight into real estate sustainability. And in many contexts, sustainability is very important to real estate industry because buildings contributes like almost like 50-something% of carbon emissions. So in this session, we would like to get some insight from different aspects, from bankers, investors, from participants, GRESB participants, developers, and climate tech company, and also some green building certifications body. Okay. May I start with questions from Tracy first? Okay. We understand Entela Benz has many initiatives to promote sustainability as well as net zero. And you are the Vice President and Deputy Secretary General of HKGFA. May we learn from you that how does borrower use green building certifications in green finance to enhance sustainability performance, and what are the benefits? Tracy, please.
Hi, can you guys hear me? Okay, Thank you, Dennis, and hello everyone, for one on the floor here and also for online. Delighted to be here today with friends on stage and on a topic that I'm very passionate about on green buildings. And thank you for AEC and GRESB for hosting this panel. So I think I want to take a step back and Dennis, you mentioned about the carbon emissions. So what are we dealing with in terms of problems, right? So I think building sectors under construction and in operation contributing to 39% of energy-related carbon emissions, and city like Hong Kong, concrete jungles. If I remember the number correctly, and Cary can always correct me, it's roughly about 60%, so even higher in relative. So that is huge in terms of carbon emissions. But that also comes with opportunities. So in order for the building sector to decarbonize to net zero, it requires $25 trillion additional investments in green buildings. And in Asia is $18 trillion. And that is not until 2050. That is between now and 2030. So the opportunity is huge. Now, looking at the market, and the total CRE market is contributing to about 10% of the total green and sustainable finance market. And in Hong Kong, the numbers, again, even bigger, so roughly about 40% for the whole of Hong Kong green and sustainable debt market in Hong Kong. Now, coming back to your questions finally, on green building certifications and green finance. So actually, this is one of the most low-hanging fruit in terms of using green building certification to qualify for green financing. There are a number of local green building certification developed locally and some that's being developed internationally. So in Hong Kong, we have the BIM Plus and China Freestyle. And internationally, we have LEED and we have IFC Edge, right? So a number of this is all well recognized by financial institutions that, you know, if you get the green building certificates for a certain level, then you qualify for green finance. And that is being widely used for a use of proceed structure. So as long as the capital is tied to the underlying asset that is being green building certified, you get it. So you see green loans, green bond, project development loans, and even acquisitions, buying a green building, so green acquisitions. However, most green building certification does not tie with decarbonization or have a net zero pathway. I think that's what Grace highlights very clearly. So in addition to using green building certifications on a use of proceed format on green financing, what else can we do? Now, over the last 3 years, we have seen tremendous growth in sustainability-linked loan market. And sustainability-linked loans move away from the use of proceed structure, and it tied to the company's sustainability aspirations or target. From a developer or asset owner's perspective, it often tied to energy efficiency or water efficiency improvement, or some to the social and governance aspect as well, like gender diversity, and from the building perspective, wellness certifications, the number of them. So we have seen different applications of that using a sustainability-linked structure. Looking at the size of these two products today, so green bond is still the biggest chunk of the markets, contributing, I think, about a third. And for the sustainability-linked loan, it has gone through the tremendous growth and is now contributing to about a quarter of the market. Now, how do we think about using a sustainability-linked loan structure to help building sector to improve the sustainability angle? So one, we have seen typically property developers say, I have a portfolio asset. Some I'm green building certified, some are not. So you design on the structure that where over the terms of your financing, every year you will improve the number of green building being certified to a certain degree, that kind of improvement. And if you achieve those certain targets, your margin, your pricing is tied to the performance of those KPIs. Now, another structure which we have seen is directly to then overall energy efficiency or intensity targets reduction, etc. So that is how is a more transparent way of tying the financing to those decarbonization target that towards the net zero. So these are typical structure that we have seen. Now finally, going back to the initiative, there are so many, but I'm just going to be super quick. So in as Standard Chartered, one of my head being the Sustainable Finance Heads for Asia, we realize how important in terms of helping our clients to decarbonize in the building sectors. So we have signed an MOU, partner with technical environmental consultants to go through the green building certifications, the IFC Edge certifications, how guiding them how to go through the process before we even look at the financing. So this is a complementary services that being a bank helping our clients to go through this green building certification to help with this journey. And also we are sponsoring a deep decarbonization roadmap for the Greater Bay Area, and it covers multiple sectors that are the key emission sectors, including green building, transportation, and some industry like manufacturing, and how to leverage transition financing or sustainable financing in general to help this industry to decarbonize. So the report is coming out early next year, so watch this space. Now, finally, one more point, switching heads using from the Hong Kong Green Finance Association angle. So I'm leading a green building project where we have published 2 reports already. One is looking at benchmarking green building certifications and looking at the energy aspect. How does it really facilitate the decarbonization pathways? So that's published. And another one, look at the Hong Kong markets from the policy perspective, how anything that we can improve. That is also published. And the current one, the final trio of this project is the Greater Bay Area. So we deep dive into a 5 cities in the Greater Bay Area in China and looking at, okay, what are the policy incentive in the green building sectors and how, again, using green finance to accelerate the process. With that, I pass it back to you.
Okay, thank you, Tracy. And from Tracy, we know that we have a lot of low-hanging fruit drive us to the green finance. So it's time for us to grab it. And also, before we grab the low-hanging fruit, we need to have a way to improve our sustainability performance. And sustainability is not just reporting, it's forward-looking. And it's not only cost, it's also bring us benefits. Okay. Ellie's term, some investment management angle, how does GRESB help to drive investors' capital to support sustainability, and what kind of key sustainable information are the investors looking for? Yeah.
Thank you, Dennis. Yeah, really happy to be here as well. I think that's a very pertinent and very important and also broad question. Obviously, GRESB is very much investor focused. So from an investment manager's perspective, I think we can unpack it in different aspects, right? Especially in real estate, when we talk about asset manager, that could refer to managers of the real assets and the investment asset manager. So coming from our organization, Fidelity, we wear both hats. So in Europe, since 2016, 2017, we started responding to GRESB on behalf of the 2 existing real estate portfolios we have in Europe, covering industrial office buildings. So in this regard, GRESB has been an extremely useful tool because just, like hearing from Grace and Quinnie just now, we understand that GRESB as a survey, as an annual disclosure exercise, covers both management as well as the technical aspects, the performance aspects of a building's overall performance. So in practice, that means more than the energy utilities, the technical factors that we're all very familiar with on a building level. It talks about the broader aspects of the leadership, governance, management of a building as well. So as a real asset manager, when we have a portfolio of assets, we go out to raise fund, find investors to allocate their capital to help us carry on with our real estate activities, be it development, refurbishment, leasing, what have you. GRESB is an extremely useful tool to very quickly summarize the overall performance. It's almost like, a stamp of confidence, and it provides more transparency and comparability across different markets. And why is this important? I think this is a, very integral point, especially to Asia, when, overall, in terms of ESG reporting mandate, it's still taking shape. Not every single market has an ESG mandate, right? So as say even listed real estate companies are at various stages of reporting with different maturity. And within the real estate sector, there are even more challenges. I was starting to get a headache when Grace showed us that, graph of, different standards available to define net zero. That's super challenging for Asia, because when Europe, which is a market that traditionally has led the way to in all things ESG and with industry standards as well, in Asia we're struggling to understand how to conduct life cycle assessment. Where to start collecting Scope 3 indirect emissions. What does that really comprise, from the perspective of different real estate players? From the developers, say on the upstream, you need to look into your embodied carbon from, say, construction materials, your construction activities. Downstream, you've got your, tenant emissions, so on and so forth. So it's no easy feat. And GRESB, allows everyone to understand as a respondent what is required, the data needs, the information gaps. And once you're able as a respondent to fill out, the whole survey and improve your score, then you have something good to show to your investors. So it's extremely helpful in terms of fundraising, raising your market profile in terms of your sustainability leadership. And in terms of Scope 3 emissions that I briefly mentioned, in Europe or in other markets around the world, Asia as well, tenant engagement has become an increasingly important aspect of real estate activities. So, of course, it's not always easy because tenants come with different scales, different profiles as well. They may not have the resource, the know-how, or even the understanding to share any Scope 3 data. And sometimes landlords struggle as well. So to sort of give us a little bit more leverage as asset owner, we can share with our tenants and be like, hey, look at GRESB. This is an international, very reputable benchmark, and it requires tenants to work with landlords. And in this process, it's not just benefiting, the valuation and the landlord itself, but supporting the tenant's organization to proceed on their sustainability journey. So there's a lot, on the real asset owner side of things. But coming back to, Fidelity's core business globally, which is the investment asset manager. And there's an overarching trend among different asset managers to, create their proprietary ESG rating. And I understand, in the wider sustainability industry, a lot of people wonder why, as different reporting standards are harmonizing, why would asset managers do that or investment managers do that? The short answer is that because, especially as a multi-asset investment manager, we need a methodology that can be easily unpacked, that is flexible to allow us to perform different levels of financial and ESG embedded analysis. And within the real estate sector, what GRESB does in this process is that as we are fine-tuning our proprietary rating, which looks at both, the risk side of all sectors as well as the opportunities, meaning the positive impact contribution of, any given standalone asset or listed real estate company. It allows us to compare notes and see where we fall short, and then we can supplement our own rating and analysis. So overall, I think it's a great tool, and I wish to see more respondents in Asia.
Okay, thank you, Ellie. Basically, we got insights from asset owner, asset manager, and also investors' perspective from Ellie. Okay, and I agree that net zero is a very tough target, but the target we need to achieve. Okay, and now it's Cary's turn. We understand that Cary, you have many roles in green building developments, particularly in HKGBC and also GBC. How does GRESB align with the stakeholders of those two organizations' sustainability initiative? And are there any joint efforts initiative?
Yes, definitely. Can I share a few slides, please? We were happily married, I think, back in 2018, Hong Kong Green Council and GRESB. The first thing we did is to have a 2-day event where we have a workshop explaining to the industry, putting industry in Hong Kong. We have regarding benchmarking, regarding ESG reporting. This something is a highly successful event. It's full house. After that 2-day event, we have an exclusive lunch with the undersecretary and with all the big shots in town, all the developers big town. I think Ellie was there as well, isn't it? Yeah, where we have a very good discussion among ourselves, the importance of reporting, benchmarking, and these sorts of things. Next slide, please. And going to the aligning the tools. For the Hong Kong Green Council, we have a best tool, which is an energy benchmarking tool, and it's accepted by the BIM Plus. And along that, GRESB also recognizing this BIM Plus, having some score. So we are really tied in together with a tool from Hong Kong Green Council, with BIM Society and also GRESB. Next slide, please. And this is also linked, of course, now to green finance. So next slide, please. And for World Green Council, we have also Green Council is also World Green Council is also an industry partner with GRESB, which we are agreed to share relevant data and performance matrix aligning and streaming the reporting process as well, and there has been very closely working together. So between World Green Council and the GRESB and also Hong Kong Green Council as well. So I think this is some of the things that we have carried out together as a partner.
Okay, thank you, Cary. Okay, according to my understandings, EDGE has also have a cross-credit alignment with GRESB, and Standard Chartered Bank has initiative to promote EDGE as well. May we have some insight on how does it enhance the sustainability performance and assist in achieving net zero? Tracy, please.
There are a number of advantage we see from IFC Edge. One is the transparency. So on the actual certification itself, it clearly stated on the percentage of energy efficiency, water efficiency, and embodied carbon efficiency compared to the benchmark of the local area. So every city, they will benchmark to that city and compare. So you know when you look at that certification of that building, you know, oh, okay, where does this green building stand in terms of these three key elements? So that transparency and the numbers, I think, is really help. And then also it's closely aligned with the EU taxonomy. And also for the multiple stages of EDGE, so the first stage of EDGE is 20% better than the benchmarking on the three elements that I mentioned, energy, water, and body. And the second level is 40%. And after that, you can, 40% is in 40% energy efficiency improvement. And after that, you can go to their final stage, which is a zero carbon, they call it. So they will monitor your operational energy efficiency for a few years and make sure that you exhausted the way that you do your energy efficiency improvement to over 40% and allow for energy offset, carbon offset from that. So there's a pathway of how you go through one stage, two stage, and monitor and look at that energy efficiency improvement to the zero that they define. But again, going back to Grace's point, there are many definitions of zero. So do when people, and every time they and they mention about transition, net zero, I will actually ask them what do they mean. So, but at least there's a pathway compared to other green building certification. And last but not least is cost and time efficiency. So it's an online app. Of course, the initial stage is online application. They still have auditor to go on site to the building, but it's a lot faster in terms of the process of going through the certifications. And recognizing these advantage compared to some other green building certification, as I mentioned, we signed an MOU that we have a technical consultant to help our client to go through the process in a complimentary way. So maybe I'll just quote a couple of cases that how we actually used it in terms of green financing. So there's initially when the MOU was signed, the pilot came out, we helped a European client come into Hong Kong and did a acquisition on an old industry buildings, and then in Tsuen Wan, and so they go through the green building certification, so we are able to qualify as a green acquisitions on that green building. So a typical structure use of proceed using green building certification. On the contrary, when I meant earlier, I mentioned about using the sustainability linked structure. Now, this transactions was for a local developer, property developers, and I saw their name on Quinnie's slide, so they're on GRESB as well. So we help them to look at a mixed building, a commercial and also with shopping center, typical structures in Hong Kong. They're going through retrofit, green retrofits on an existing relatively old building. So on the landing of 5 years, we use IFC Edge certification. Step 1 is you certify, and then over the following 4 years, when they're going through the green retrofittings, we use that to monitor the energy efficiency improvement during the terms of the loan. So if they achieve those agreed predefined energy efficiency more than the 20% benchmark from year 1, then they get some pricing benefits using this sustainability linked structure. So I think this is relatively innovative in terms of you are still using green building certifications as part of this green financing, but you are able to use that to articulate the energy efficiency during the terms of loan. So I think that is quite effective and useful way for addressing on existing building retrofitting problem as well. So.
Okay, thank you. Yeah, and I think it's Johnny's turn. Okay, Johnny, we understand Henderson Land has participated in GRESB for 2 years and got very significant improvements on scores and stars, and also other sustainability ratings as well. Congratulations. Can you share with us the sustainability philosophy of Henderson Land and how to achieve a big jump in sustainability performance?
Yeah, sure. Thanks, Dennis, for inviting me to come along to our building, Harbour East. It's good to be back. Last time when I was here, it was for the AGM for Henderson Land. So it's quite an iconic building that we are in right now. At Henderson Land, our two chairmen, Dr. Martin Li and Dr. Peter Li, both are strong supporters of sustainability, not only at the Henderson level, but also at the group level. So if you were to look at town gas initiatives, there are a lot of renewable energy initiatives that they are working on right now. And then look at Mir Group, they just announced some green initiatives, to the public. And in fact, town gas will have an ESG forum tomorrow as well to promote sustainability. And as you know, at our company, our vision is very clear. We would like to combine our sustainability strategy into our day-to-day work, to focus on 3 major issues: the climate risk, COVID pandemic, and also, how do we promote a sustainable city in both Hong Kong and China. And in order to do that, we mentioned it quite a lot of times before, is we have a strategy in place. We focus on green, reducing our impact to the environment. We focus on innovation. How do we promote technology innovation as well as social innovation? And also we focus on people protecting their health and safety, giving them healthy environment to work, and also a sustainable city where not only do we think about how do we construct a green or healthy building, but at the same time, we have to think about the neighborhood, improving the environment at the same time. So once we have the strategy in place, next question is, for the GRESB assessment, why do we do it? Why are we so serious in focusing not only on GRESB, but also Dow Jones, CDP, Hang Seng Index, and the others? The reason is because, if you were to look at our company performance is quite easy. You look at financial reports, you look at the share price, it reflects, our performance, on a real-time basis. Whereas for sustainability, we only prepare the report once a year. Although we do have, sustainability-related news being communicated on an annual basis, and ratings are done on an annual basis. We want to give investors more confidence in our company of our achievement in sustainability. Hence, we focus on the key rating agencies. And the reason why we have, better results this year compared to last year is because last year I think we were quite close to the deadline, in collecting all the information for green certs, defining the scope of our coverage. Whereas this year we have a lot more time to prepare for it, and we work with, internal colleagues and external consultant, try to understand what GRESB was looking for, in terms of management, focus, performance, and development. And we realized that, for management, policy was one of the weaknesses. And that's why over the last 2 years, we have strengthened our policies. We have introduced 12 new policies covering biodiversity as well as sustainable procurement. And in terms of the other two areas, waterways, setting targets, we have 12 new targets for 2021, involving energy targets as well as innovation targets. And also, we have done third-party review from an independent accountant to provide us with assurance report. So all these, put together were, I think the first time when we did it, we had a pretty respectable score, but we just didn't realize that you have to reach, 80-90%, a score of 80-90 to be, on getting 4 or 5 stars. So I think we continue to, to try our best to get the highest score that we can. But I would suggest, instead of doing it on a relative basis, we should try to think about doing it on an absolute basis, where eventually all companies are going to comply and step up in ESG. Everyone is going to get a very high score. So I suspect it's just like when you are working on the green buildings, once you satisfy certain criteria, you become platinum. So rather than, doing it on a relative basis, my personal view is, we can consider doing it the other way. Thank you.
Yeah, thank you, Johnny. Yeah, another objective you can think about, net zero objective. Yeah. And Entela, it's a question for you. Okay, achieving net zero can help to slow down global warming, but we also need to consider our resilience and adaptation to climate change. GRESB has included some questions in the survey about climate change, but does not have a score yet. To prepare for upcoming leaks, may I invite you to talk about your climate tech solutions and how can you help? Yeah.
Thank you, Dennis. Thank you, Grace, for having me here. It's great to see again some old friends after 2 years and have face-to-face interaction. I'm very happy with the comments Cary made, because I know some of the companies here in Hong Kong have started really looking into physical climate risk, because most of the talk is net zero, carbon emission, mitigating climate risk, global warming, and limiting that to 1.5 degrees, which is highly optimistic scenarios. The truth is we're already 1.1 degrees above, and by 2050 most likely would exceed 1.5. The idea is that if you mitigate, you don't have so much physical risk, because we know the trade-off between transitional risk and physical risk. So there's a certain comfort level in the market that we're going to mitigate the climate risk. We're going to achieve 1.5, 2 by all these net zeros, agreement, etc., which is great. But in case we don't, there is still global warming. It's already baked in the system. So by 2050, what you'll see is not what we have seen in the past, already by 2030. So there's nothing we can do by 2050. It's only we hope to stabilize by 2050 for the 2100. So the risk is already there. And we see the extreme events risk are intensifying. They are becoming more severe. They are co-occurring, but most importantly, they are moving. They are showing up in places they have not shown before. Like in typhoons, we do observe a movement north. So typhoons are shifting north, means places like Shanghai will see much more stronger typhoons and winds. Question is, are the building codes strong enough to deal with this risk? If you talk to climate scientists in Hong Kong, they'll tell you Hong Kong has been lucky many times. especially a couple of times, and the last one, Typhoon Hato. If the rainfall which happened in Macau would have happened in Hong Kong, given the number of consecutive wet days, then you'll see landslides here, and Hong Kong is fully packed. I mean, it's highly dense. So the risks are here, actually. It's not, we don't have to postpone. Number one. And number two, what we see globally is that there is an adjustment of valuations in properties in general after this risk have happened. You can see Florida, the insurance premium has gone up, or there's no insurable anymore, these areas. Same in Australia with the recent floods. Many areas now uninsurable. People move away, or a property becomes worthless because it's highly risky. So we need to think about physical climate risk, and we have to start pricing this physical climate risk already now, because it's too late later. And how do we do it? It's quite complex. The point is, how do you use it? You use it from first, before you buy a property, is due diligence, before you invest, because real estate is long term. Then it's infrastructure around the building. Your property might be good because it's elevated, but all around the building gets flooded. So what do? Then investors, as Ellie said, asking for that. Have you looked at climate risk? What are your key climate risks? What are your key assets which are most at risk? What do you do in terms of resilience and adaptation? And then the last I'll bring, because I come from finance background, and Tracy is in a financial institution in a bank. I used to work for a bank. Green bonds, climate finance. How much of these green bonds is for adaptation? It's less than 5%, or even lower than that number, according to World Bank. Why? Because it's difficult to measure. The reason is they say, okay, renewable energy, energy efficiency, I can measure, I can tie up the proceeds. How about adaptation? How many green bonds are there with the proceeds for building adaptation, building resilience? It's possible to do, and that's where all the climate finance has to go now. Mitigation is good, but we need to adapt, and we have to build resilience. So how do you now issue green bonds in the market with adaptation? For banks, that is huge, it's an avoided cost. It's not a profit they see it now, it's not tangible. They have to use imagination. How much cost do I save? So you need climate solutions which can price this flood risk, give you a dollar value to that. We need storm risk, sea level rise, and that's what we do. Sorry, took too long, but that's it. Yeah.
Thank you, Entela. Yeah, and definitely we know that investors have some concern on climate change, particularly as they would like to know the value at risk. So we have a climate value at risk, and besides risk, we also have some opportunities. May I ask, Ellie, what are those key climate change related risks and opportunities we would normally be anticipated by investors?
I think Entela has summed up the commonly discussed risk really well. I think the obvious ones would be physical risk threatening individual assets, and potential impact on the building valuation, higher insurance premium, and very fundamentally, buildings are where we live, work, play, conduct a lot of human activities, the health and safety part of it, right? The physical risk basically captures all of those. But from an investor standpoint, I think the transition risk is something that we're really interested in, especially when you're looking at investment portfolio level. It's difficult enough to generally integrate ESG risk, which, the analysis is primarily based on disclosed information from public companies, as well as qualitative input from our engagement discussions with individual investee companies. But if you throw in the unknown climate risk, which is forward-looking, based on constantly evolving climate models that come with a ton of assumptions, it's extremely challenging in that sense. And I think what's worth bringing into this discussion, because we've talked a lot about the technical side, the environmental side, is the social risk as well that comes with climate change. When we talk about transition, think about all the net zero call, the actions that are taken, especially by high impact sectors and activities. For example, utilities, companies, energy generation, right? There's this global movement to decarbonize and to sort of decommission a lot of the coal-fired power plants. What about the people that are working at existing facilities? Will they be displaced in terms of jobs? as investors, while we are enabling greener activities, we also have a responsibility to ensure there's a just transition. So it's always, an opportunity and like an act of balance, right? So I think that brings me to focus a little bit on the hopeful side, the opportunity side. I think we all know climate has a ton of risk, and we are all taking action as part of the GRESB community. Just want to share like a piece of very interesting statistic that I read recently. So property technology, right? That generally covers a wide range of things from, climate data technology that Intela has been driving to, say, building certification software that Cary has been promoting, and a lot of the building analytics, energy performance tools that AEC, Henderson, Stanchart, everybody's has looking into, all the way through to more like customer-facing front-end software could be termed as prop tech. So as a global new space, global industry, prop tech attracted 24-something billion US dollars as of 2021. And it's set to grow 3 times by 2030. So that's a huge opportunity for investment, right? Zooming back to the building asset level, as we know, a lot of us in the audience are building owners. Yes, we need to invest money, channel capital to look into resilience, adaptation, getting certification, getting the assessment done. Yes, it requires new and additional investment. But at the same time, think about the additional building level amenities that you can introduce to, as a paid service. For example, if you want to promote green transport, EV charging service can be a new paid activity. If you want to collect Scope 3 tenant emissions for your reporting to attract more investors' attention, capital, you can introduce maybe reporting service or data analytics support for your tenants, renting your office space and whatnot. So I think, just to name a few, I think there are tons of opportunities. And if you're looking into renewable energy generation, if you're operating in markets with feed-in tariff, with different renewable energy supportive schemes, that would open new channels of income as well.
Okay, thank you, Ellie. Yeah, definitely, I agree. It's like green tech investment is very, very important, and also it will drive the impact to sustainability, and definitely we need it to achieve net zero as well, no matter what definitions. Okay, and back to Tracy, in the context of climate change, and as mentioned by Intela, like less than 5% are used in climate adaptation. Okay, do you have any new products to promote in green finance to help this situation? You can use the 2 hashtags to explain this.
How long do you have?
Honestly, 4 minutes.
Okay, let's write on thematic. Since you're on transitions, right? So thematic. So the market has moved on a long way from green to rainbow. From we talk about green and GSS, green social sustainability, to we mentioned already on sustainability link loan or sustainability link product in general. So that thematic, and then to transition, and the consideration of just transition, like Ellie mentioned, is super important. I think from that perspective, when this market is still the most nascent, and so that's why every time people say transitions, I say, what do you mean? Define. So from us in Standard Chartered, so we publish our transition finance framework. So under the principle of science-based target aligned with 1.5, considerations on do no harm, so the social elements, and also the not resulting lock-in into asset that actually trap asset that is high carbon intensive as well in the future. So under this 3 principle, we define what are the eligible asset and activity that is aligned with our transition finance framework. So that is published. So feel free to check that. Moving away from thematic and looking at product itself, right? Let's talk beyond bonds and loans, right? So everyone, all of you know and hear this a lot now. So we don't have to go through that. But I want to share with all of you that in the sustainable finance market, beyond bonds and loans, there are a lot more products. So ESG derivative, trade finance. So we talk about embodied carbon. We talk about sourcings of the material, and addressing that. And sustainable trade in the trade finance market has a big role to play. And then also on liability side, so we have rolled out sustainable deposits, sustainable current account, saving account, structured notes, etc. So from this element is where we, for the cash that you put aside, we put that cash to work into deploying into asset, green and sustainable asset for you. So from that liability group. Now, these products is always, we started with the capital markets from top down for investor, large corp, SME level. But now we have seen sustainable finance market now going into the retail market. So we have seen the Hong Kong government issue a retail green bond. So not just large corporates or investor can get into the bond market. You and I can get into the green bond market also. And beyond that, I mentioned in the retail market, we also seen sustainable deposit, cash account. And most importantly, we're talking about building. In Hong Kong, we have green mortgages. So you and I, if you are living in a building that is green building certified, and there are some sort of incentive to for you to get your mortgage with banks like us, that we cover both primary and secondary market in the green mortgage as well. So we have seen these evolutions of continue moving from thematic and from product and cutting across different segments of the market all the way to retail. Last but not least, I don't know whether it's 4 minutes yet. One thing that I have to call our mentions, we talk about the latest hot topics on products. We can't move away from voluntary carbon credit. So I think some of you might have seen the news that the Hong Kong Stock Exchange have launched Core Climate, which is a platform for trading, a marketplace for trading voluntary carbon credit. So this, we see that has a major role to play for a high, well-functioned, high-integrity and high quality carbon credit. We see that it can really help to accelerate the transition journey. So with that, a lot more to come from these exciting platforms just launched out. So watch this space.
Thank you, Tracy. Definitely, I will invite you for another event to talk about that. I'll give you more time on that. Okay.
Okay.
And Cary, according to the different real estate sustainability standard, they have some touching on net zero initiative, and as mentioned by Grace, there are many definitions. Is there any approach for them to reach a common ground? What's your view on that?
Yes, thanks for the question. Can I put up my slides, please? Yeah, I think up to now, I think you all realize from the various speakers of the challenges that the industry is facing regarding the consistency of definitions, database, baseline, all these sorts of things. So what we are doing for the Green in the Hong Kong Green Council is to establish a climate change framework to align the industry, which is a living document and also a reference guide for the industry. Is to align the directions, definitions, targets, scoping, database, best practices, baseline, roadmap, etc. So this is the objective of this. So let me show you some more details. Next slide, please. So we divided into 10 chapters, but we prioritize on 3 only. The first one is embodied carbon, which is the most difficult thing because is regarding scope 3 carbon emission. We are lack of data. Then the second is a bit easier. Is on operational carbon. It is energy consumption, and the third part is regarding climate risks. So we are prioritizing these 3. Of course, there are others which we put into a secondary priority, which is the embodied carbon during operational phase, which I think not just Hong Kong, I think the whole world is lacking this kind of data and experience of collecting those data, and also at end of life. So we keep those as a secondary priority. Next slide, please. So regarding embodied carbon, what we need to do for the industry to move ahead to zero carbon is that we need to set a baseline. We need to agree on how this baseline is set regarding methodologies. And after we agree on the methodology with the industry, then we know what sort of database we need to establish. Then we try to collect the data, and also we need to understand more on the parameters. Say, for instance, like the impact of the height of the building, the footprint of the building, how it affects with the embodied carbon intensity of buildings, and also the baseline year. So this is what we are trying to do, is to study on this and then try to set up a baseline for the industry. The second is the roadmap. For World Greening Council, they are setting a roadmap of reducing by 40% from the baseline by 2030. So we are discussing with the industry of the feasibility of doing that, and also the solutions. But from the preliminary discussion with the developers, with contractors like Gammon and a lot of things, all of them say that, well, we should establish this kind of very more aggressive targets for the industry. So the third thing that we need to set up is really by 2050, the zero carbon. Well, what is the definition of this? So this is what we are doing at the moment, and hopefully with this setup, then we can have some certifications for the industry, and then we can then discuss with GRESB. Next slide, please. Now, regarding operational carbon, we do not see that the matrix should be carbon, because it involves the supply side and demand side. So therefore, we will focus on the energy intensity of a building instead of carbon. So we are trying to adopt the definition of zero carbon ready building, which is EIA's definition. The definition is a highly energy efficient building, and then is accessible to renewable energy when it's available. So that is the red line, is the reducing the energy consumption or the energy intensity of the building. And then the second line is the supply side, is decarbonization of the supply side. And then the two added together, it makes our building Paris-proof or zero carbon-proof building. So with this definition, what we need to do is, well, we need how to define energy efficiency, how to define whether that building can be termed as a highly energy efficient. Next slide, please. So on that, we have built up a EUI profile for Hong Kong. EUI is energy intensity of buildings for Hong Kong. We use the energy data collected in the last energy audit, which is about 7 or 8 years ago. And then building on this database, we can then set up a benchmarking system for Hong Kong's building. And then we can issue them with an energy certification. And then using the same energy profile, we make reference to science-based target and also the decarbonization pathway of the two power companies. And then we can then establish a target setting and progress certification for the industry. Okay, next slide, please. So this is a chart showing the energy intensity to meet the super low, extra low, and low energy standards. This is more or less similar to what the one in Singapore, but the Singapore one has only a super low energy building. So to encourage the building owners to progress step by step, then we have these 3 to 4 stages. Next slide. So this is in graph form how developers or buildings can set up their roadmap. They can go from low zero energy to extra low energy, then to the last slide is the zero carbon ready building. Next slide, please. So what we are also doing just this morning with Grace is the managing climate risk. At the moment, we are now doing a stakeholders engagement to try to understand how they can assess the climate risk of the buildings, the disclosure, what's the requirement, the gap, etc. The adaptive and resilience, the methodologies, solution, best practices, these are things. And then the need for future researchers and action. And the last one is to make this as a platform, as a dialogue between the industry and the authorities. And these are the things that we are doing, try to align the industry. Thank you.
Okay, thank you, Cary. Johnny, I think after hearing from all the speakers, I think it's a good ground for you to suggest to chairmen about the Net Zero initiative. Okay, by the way, thanks for sponsor this venue from Henderson Land, and it's BEAM plus Platinum rating, and also award GBA Low Carbon Buildings Top 100 award, and the Henderson's is yet to complete. Can you please introduce the key sustainability key features of this building? Also, may I know the new and sustainability initiatives of the Henderson when it's in operation, which may help to enhance GRESB score and also any net zero initiative? Okay.
I should be able to share
5 minutes. Okay.
I may not need 5 minutes, but okay, I try to stick to that time. Okay, let's focus on this building first. You mentioned this is a platinum green building, but if you were to look at it a bit more closely, what we're trying to achieve in this building is not only green, but also health, giving people, the tenants, the experience of green and healthy lifestyle, by working in this building. So this building is probably the first building to achieve China Green, China Healthy Building Label 3-star, which is the highest level of achievement. And if you were to look at some of the features in this building, when you have time, you can go to the podium level where there are some outdoor gym equipments where people can relax and exercise. There's like an urban farming facilities in place. And also there's a weather totem where tenants can access the mobile phone to look at real-time weather data. So these are some of the high-tech features. If you go back to the level that we are in right now, some of the windows can be operated by our mobile phone. And as improving the indoor air quality, can benefit the health, well-being, and also the productivity of the tenants in the building. And that's why, we have these features in place. And also we have daylight sensor, which can be linked to the indoor lighting system in order to reduce the energy usage. So these are just some of the features that we have in this building. If you were to look at the one which is an iconic building, the icon amongst all the icons in the central area, in my opinion, is the Henderson building, which is under construction right now at number 2 Murray Road. If you look at all the green accreditations, we have already got preserved platinum, not only from BEAM Plus, but also from WELL, and also from LEED, and also from other Chinese professional bodies. And at the same time, if you look at who we partner with Zaha Hadid in terms of the innovative design. We partner with Microsoft in terms of technology, Arab in terms of sustainability. And when Ellie talked about PropTech, one thing that I pop up in mind straight away is digital twin. So in that building, there's going to be a virtual representation of the physical building where we can do a lot of simulations, such as physical risk assessment, transition risk assessment, testing, and monitoring, and then it will help us to make better decisions going forward. And at the same time, if you were to look at how we collaborate with our tenants and individual employees, the Henderson came up, we announced an ESG partnership program, which is called LEAD, LIT, L for landlord, T for tenant, and I for individual employees. So it's a 3-way partnership where we encourage our tenants to also, work on ESG. And if they do well in their jobs, we will award them with Henderson coins, and where they can shop in our subsidiaries and associate companies. So these are some of the initiatives that we have in place to not only trying to help ourselves to get a better rating in sustainability, but at the same time, using our sophisticated system to provide all this ESG related data to the tenants. And so you can see that even before people can move in, we already attracted like-minded clients to sign up with us. So we have a very famous international auction house that will occupy 4 floors of our building, and also an international financial company at the top, one of the top floors. And if you were to look at something more unique about this building, is there's going to be a glass rooftop banquet hall, which is 8 meter in terms of height. So it's very unique in terms of the design. So I think our chairman has put a lot of time, in supervising and designing on this building. So, and also one final thing that I can touch on is that if you were to look at the green features, there's a public park which is right in front of the Henderson. So recently we have agreed with the government that we will take management control of the public park, and then we will have a lot of connections, connecting people, to nearby shops, restaurants, and so on, MTR stations. So these are some of the innovative features, some of the programs that we have for the Henderson building. Thank you.
Yeah, thank you. We also in line with your thinking. So we have a very simple setting here, and we have a sustainable food waiting for us after this panel. And back to Entela under TCFD framework. I know that they require assessments on transitional risk and physical risk, and for transitional risk and for this risk handling, I know that you are with in collaboration with AEC Group, and they handle the transitional risk, and you are handling you handle the physical risk. And under the TCFD requirements for the physical risk scenario, they need to have a different scenarios to analyze the financial impact. And can your system estimate the financial impact under different scenario? Do you have any demonstration of that?
Not here, and I think everybody will fall asleep if I do the demonstration. It's quite complex. Let's put it this way, it's quite complex. We are a Hong Kong company, I keep on saying that, but we have a global coverage, and we are as good, if not more comprehensive and more robust and more accurate than some of the US and UK competitors. That's because we started from Asia. And Asia data is not there, so we had to generate missing information data in Asia. We have to clean the data, we have to cluster the data, so a lot of AI and all these technologies. But it's where you start, when you start the hardest, it's easy to expand to US and Europe where the data are available. We do projections, so all the analysis is forward-looking. It's under different carbon scenarios and under different time horizons, so it's not backward-looking, which will be misleading most of the time. Because as I mentioned, climate is changing very fast. So one cannot use past data to extrapolate and get future prediction. That will be, with a high degree of confidence, misleading. So we take projection from IPCC 6 and 5, and 5 and 6, I should say. And we, after that, run all the flood models and climate models, and per site, we look exactly how much risk you have, not just high and low, not score, but per hazard. Because you need to have a hazard level to establish the vulnerability, the damage, the dollar loss. You can't go there on a high-low and then map it to dollar loss. That's again going to be a number which is not accurate. I want to come to Ellie's point because I come from asset pricing. I studied 4 years. I mean, my PhD was asset pricing back in early 2000. No one, if somebody asks me what will be the stock price, I know, of Amazon or take any company by 2030, everybody will laugh. I mean, no one can project that or be taken seriously. Why in climate we're asking for high confidence interval? It's like, it's mission impossible. But we have some idea. So in climate, we don't call it forecast because that's weather. We don't call it prediction because that's too strong. We call it projection. Climate models are very well established, more than 100 years ago. I mean, it's all physics equation. Temperature and humidity gives you rainfall. That no one changes. High carbon emission leads to global warming, to higher temperature, and higher temperature leads to CO2 concentration. It's a feedback loop. So it's not the climate models which are wrong. What is unpredictable is human activity. Is this net zero targets? Is a carbon which is going to be released in 2030, 2050. That will drive the temperature, will drive the humidity, will drive the rainfall and the flood at this place, if there is. There's no flood here. So the uncertainty comes from human activity because humans are unpredictable. So that's what I can say. But can we project? Yes. How do you do to make investors and users comfortable? You give all the RCP projections, the high and the low, where it's going to end up, this dollar loss, or the relative value from now to the future. So it's going to increase 1.5 times or 2 times. At least you have an idea how worse it's going to get. But other than that, I don't think that one can say like it's going to be $5 million and that's what I'm going to prepare for. You know, but it's doable. The short answer to that is all doable. In Hong Kong, we are at 5 meter. Globally, we're at 90 meter. But in Hong Kong, we plan to go down at 50 centimeters resolution, which is half a meter resolution and a property level. It will give you rainfall, floods, storm surge, sea level rise, typhoon, landslide, whatever. All the list.
Yeah. I think so today's we maybe conduct a COP27 Hong Kong version. Yeah, thank you all the panelists, and I think we got very valuable sharings from all the panelists and also previous speakers. And now is Q&A sessions. Like, is there any questions on the floor to want to ask the panelists? Or any questions online? For those who join online, you can type in the chat box and ask your questions.
Let me ask once.
Okay.
Thank you. We know that the climate related disclosure requirement is coming, and then it seems the building sectors in Hong Kong is still trying to grasp how to respond and to that more stringent disclosure requirements. So any maybe suggestion from the panelists, or any tips for us to better get equipped, prepare for this? Yeah.
Or maybe I get started. Sorry. At Henderson Land, we have already started our conversation with our accounts department. So one of my colleagues is here today. Sorry, I was about to answer the question, but then my voice is not in perfect shape. Okay. I think I need some water. I think my staff can give me some water. Yeah. So I think a few months ago, we were looking at the exposure draft 1 and 2. Thank you, Tracy. And then we were also thinking about what are the risks and opportunities for us, and what are the financial impacts associated to those risks and opportunities. And also we were thinking about the climate resilience strategy. So also at the same time, we have been engaging some of the consultants, to get their viewpoints as to how do we address these issues. I think different consultants or even people internally have different opinions on how do we, report on the climate risk and physical risk. So I think we are still in the process of assessing the best way to deal with the reporting. Hopefully the standard will be released very soon, so we will have more ideas going forward. It's good to attend different conferences and hear other people's opinion. So I think that's what we are working on right now. Thank you.
Can I chip in on that? There was just a report released a couple of weeks ago from TCFD. They searched more than 1,400 disclosures, and 40% of the companies could disclose 5 out of 11 items, and the majority will just be 2 out of 11. Why do they disclose 2 or very little, or just not even half of that? Mainly it's because it's very difficult to measure. Okay. However, just starting the process is good enough. Just the key the conceptualization at what are your key climate risk, and what do you think will be the key assets to look at, without having to go into dollar loss. Now, if you go to the dollar loss and you do the whole exercise and really know exactly what we have seen from our clients and reporting at London Stock Exchange and other locations, when they report, the more they report, the better the perception has been from the investors, from big pension funds and big stakeholders, because they look at it as they know the risk. I said they're knowing the risk of your risk. So if you not analyze physical, climatic, and transition risk, you don't know what you're facing. But by analyzing it, at least you know what you have to measure and what you have to address. So it's actually positive, whether how much you disclose is up to the company. But if I can say so, in ESG 10 years ago was like, oh, I don't want to disclose too much. In climate, we see the opposite. The more they disclose, the more is welcome from the market, positively. It's not like you have more risk. It's actually you knowing what your risks are, and you sooner or later will be addressing that through the resilience plan, part of TCFD.
Yeah, thank you.
Yeah, sorry, I just want to echo what was said. I think the starting point for a lot of the companies that are starting to adopt TCFD recommendations is don't fear it, and to acknowledge the fact that climate risk is not just an environmental risk. So if we just look at sort of the rubric of the TCFD framework, governance is a big part of it. And when investors look at these disclosure reports, when they're all done, the technical assumptions are obviously super important, right? And then we understood and learned today that we need to look at the hazard level and not just like high, medium, low risk. But at the end of the day, it's a business risk, is in a sense that climate risk should be very much embedded as part of the enterprise risk management. And the more disclosure, the better, and really think about and demonstrate to the readers of a report, the target audience of a report, how this risk will be managed from the board level all the way through to the front line.
It's positive signal.
Yeah. How about Cary or Tracy? Do you want to? But 1 minute.
That's why I was trying not to respond. No, I will answer a different way. So I really like how Antena responds about the investor knowing your risk of your risk, right? So I think from a bank perspective, it's precisely that. So we have a net zero commitment by 2050, but we also set a 2030 target for our high carbon intense industry. So what we do is we look through our client's book, and then we have the whole climate risk analysis desktops to really calculate and look at, okay, what is their risk and whether they are above or below my 2030 interim target, and then assess on the approach and how we can help our client to transition. Because at the end of the day, if my client is not net zero, I cannot be net zero. So yeah.
Yeah, pretty good. How about Cary?
Yeah, I think in the past two stakeholders engagement, we really feel the frustrations and challenges that the industry is facing in regarding assessing and disclosing climate risk. I think what we can do is to try to issue out guidelines. First are the easiest one, and then we understand more on the gap, and then we do more researches to try to in a year or two's time to give the industry a easy, user-friendly guideline, so that they can adopt to assess and disclose their climate risk and take actions.
Okay, thank you so much. And probably that's the end of the panels. May I invite all the panelists to stay in front, and then I try to have some appreciation certification for you guys. And next year I will do it by carbon credit VCM market. Okay, yeah. Because now they don't have much products waiting for the development, okay? And Cary, yeah, and also Tracy, and Johnny, yeah, and Ellie, and Antena, and let's take good photos here. And Grace, you can come, yeah. Hey, Quinnie, do you want to join us, or she's still here?
I may.
Yeah, good. One more.
I will miss the panel. Very good panel. Thank you, everyone.
And also, may I invite all of you come to stage and have a good photo together. Yeah. Oh yeah. Maybe you sit down. Yeah. Sit down, and then we go back to. And after this group photo, we Clean, our sustainable food sponsor, would like to share a video about its missions and also the operations, how to achieve the sustainability. 好啦，大家坐低坐低。OK。OK。Okay, and let's have the videos about Clean's operations. Yeah, so we need to know what we are going to eat, right?
There's no denying that the food industry has been a big contributor to climate change over the years. This is clearly seen in the industrialization of food production, extensive deforestation, and the day-to-day consumer reliance on plastic-packed food delivered on a moped. Our system is broken and in a downward spiral. We asked ourselves the question, if you started a city today, how would you structure it differently in terms of food? Our mission is to produce 1 million meals a year, meals that are high quality, use regenerative ingredients, and at a fair price for everyone. At KIN, we're driven to change the way we eat through technology, enabling whole districts to shift to regenerative agriculture and carbon-free delivery at no extra cost. To be successful, we need to offer our customers better convenience, more access to great food, and an easier journey than currently exists. KIN does exactly this. Our app curates some of the most exciting chefs and restaurants from all around Asia, compiled into easy food playlists, produced by KIN in our green kitchens, meeting our ingredient charter, which ensures a local, regenerative, sustainable, and carbon-conscious supply chain. Food is emotion. The way it pulls on your senses, it has the ability to create memories. It makes you feel. It brings people together. Your kin. This, paired with the benefits of technology, can help change the way we eat, one meal at a time. Whether you're thinking of ordering a quick lunch at your desk or eating in with us, discover food brands you love and more through our KIN app. KIN enables you to create your own food playlist from dishes that you love, or find new dishes and brands through our playlists specially curated for you. No more boring lunches on a Monday or any day. We're here to make food easy, fast, and delicious. You can pre-order up to 48 hours in advance, available for delivery, to go, or eat in our food hall. It's simply good food as you want it. Not sure what to get? Watch the story behind each dish and connect with the chefs. Friendly warning though, you can order and eat everything you watch. We're kicking off with over 40 brands, all a few clicks away through our app, and we can't wait for you to be part of the KIN community.
Thank you. And today
Whether
we are
you're
going
thinking
to
of ordering a
try
quick lunch at your desk
very
or
signature sustainable fish sushi. Yeah, so it's a sustainable fish sauce. So they have lots of sustainable ingredients and operate in sustainable way. And we pay a visit to the kitchens already. They have the capacities to butcher the whole beef on site there. with any transportation. Okay, and back to Quinnie. I would like you to wrap up the event. Yeah, Quinnie.
Thank you, Dennis. I'm sad that we'll be missing on sustainable food. I think next year our team from Asia will definitely be in Hong Kong and have the in-person event.
Yeah, an incentive for you to come next year.
Yeah. But once again, we apologize we can't be there in person this year. But we really want to congratulate the growth in terms of participant numbers as well as score from Hong Kong region. We've seen a lot of success and growing number of participants wanting to do better and improve. And we also once again want to congratulate all the regional sector leaders. It's not easy because we have so many assets, so many participants in the world. They're all world class, and to be able to make that list is very, very impressive. And we have many from this region that made that list this year. And thank you again, everyone, for coming here and joining us to listening to how we did last year, and also hopefully got some insights from us based on all the analysis. We will also continue to do our part to develop more useful tools for the capital market and for also real estate and infrastructure industries, and then also try our best to make every year's standards more and more relevant for all of you. Thank you.
Okay, thank you, Quinnie. Yeah, and for those online, you cannot catch up during the this event. You can still come to our networking drinks. We are waiting for you. Okay, thank you. Thank you.